Are you aware that ARK Invest thinks Tesla stock would increase by more than 10 times in the future? ARK Invest is still optimistic about the company's shares, even though many investors have lost faith in it. Continue reading and following to learn the reason for ARK Invest's comment. The volatility of the stock market prices is comparable to that of the regular market. While the prices of basic commodities and oil are still surging, the stock market is starting to exhibit a downward spiral pattern. In spite of this, a few well-known financiers and investors think Tesla will keep performing well and could perhaps become extremely successful soon. Discover why ARK Invest thinks Tesla stock will increase by more than 10 times in the upcoming video. The Austin, Texas-based American automobile and clean energy firm Tesla is best recognized for creating and constructing electric cars. To offset you with a market valuation of almost $800 billion, the corporation reports $31.05 billion in total revenue for 2020. More than sufficient incentive for investors to keep buying. Tesla has developed into the biggest automobile manufacturer in the world, and it currently dominates the market and seems set to stay there. Those who are acquainted with the sector are aware that daily fluctuations in stock prices are caused by market factors. Supply and demand determine share prices. If there are more buyers than sellers, the price of the stock rises. However, Tesla's stock price also varies. Nevertheless, in early January, Tesla's stock price crossed above $1,200 a share, coming very near to its all-time high of $1,243.49. Wall Street calculates that the stock is worth 100 times the earnings per share of Tesla, which makes it around 10 times more valuable than the stocks of conventional automakers. Once more, stock markets can rise or fall sharply and are difficult to forecast. Experts predict that Tesla investors will become extremely wealthy in Q2. You might wonder, what evidence exists for this claim? Tesla announced in April of this year that it had delivered 310,048 cars in the first quarter of 2022, a 68% increase over the same period the previous year. Tesla posted a record quarterly profit of $3.03 billion for the first quarter of 2022. In the same month, that revenue jumped 81% year over year to $18.08 billion, exceeding Wall Street projections. Elon Musk, the CEO of Tesla Inc., claimed through his staff that he agreed with Cathie Wood when she said that if the company performs well, Tesla will be worth $300 per share. The founder, CEO, and CIO of $60 billion ARK Invest, which manages many actively managed exchange-traded funds and makes investments in cutting-edge fields like genomics and self-driving cars, is Cathie Wood. Simultaneously, multiple actively managed exchange-traded funds are managed by American investment management company ARK Investment Management LLC, also known as ARK Invest, which has its headquarters in St. Petersburg, Florida. ARK Invest provides investment solutions to investors looking for long-term success in the public markets with a singular focus on disruptive innovation. In a recent interview, Wood said that her base case for Tesla is about $3,000 per share, and that their estimation of the company's success has increased. She clarified that this is because, in spite of other businesses' forays into the electric vehicle sector, their market share increased significantly rather than decreased. According to ARK Invest, Tesla will be able to start producing cars in 2025 and be able to generate between 5 and 10 million units. In fact, they revised Tesla's valuation model, putting the company's stock price goal as high as $20,000 by 2030 and as high as $4,600 in the best case scenario for 2026. The most recent version of ARK's open source Tesla model predicts a value per share of $4,600 in 2026. In their 2021 open source Tesla model, ARK stated that they anticipated a share price of $3,000 in 2025. They did, however, alter this position in light of significant modifications such as estimates of capital efficiency, assumptions and inputs related to autonomous ride-hailing, and a one-year advance in the prediction to 2026. The most recent version of ARK Invest's model presents revised estimates for the overall autonomous ride-hailing industry, as well as for every price point at which Tesla is expected to achieve fully autonomous driving. Their examination of consumers' time values suggests that there would be a greater demand for autonomous ride-hailing at higher price points than were initially predicted. Additionally, Tesla's capital efficiency is increased by ARK Invest's upgraded model. When the Model 3 was scaling up in 2017, Tesla's capital investment per incremental unit of capacity was approximately $84,000. By the time the 2017 model was released, that number was closer to $7,700. According to their estimates, Tesla will invest between $6,000 and $8,000 for each additional unit of capacity by 2025. It could be more prudent to think that Tesla will spend $2,000 to $7,000 for each additional unit of capacity in 2026, given its significantly better than anticipated capital efficiency. Do you think that Tesla's stock will increase by more than 10 times in the future, as predicted by ARK Invest? Post your ideas in the space provided for comments below. The independent American investment bank and financial services provider Piper Sandler Companies has increased its price target for Tesla shares to $13.50 and stressed that it is a buy. This suggests that purchasers may anticipate a profit on the company's share of up to 55%. Piper stated that it updated its valuation to take into consideration new deliveries, capex, and margins, and that it now anticipates Tesla to produce more cash since the stock may be worth more. According to a formal letter from global equities research co-founder Trip Chaudhary, Tesla's second quarter of 2022 is already looking quite promising. As per the electric vehicle focused website Inside EVS, Chaudhary is not your typical analyst who only makes reference to recent headlines on Twitter or utilizes models to forecast figures. They say Chaudhary is perhaps the only analyst who visits the Fremont factory on a regular basis. Renowned YouTuber Dave Lee, whose channel covers every aspect of investing, continues to be optimistic about Tesla stocks and consistently states that he is in this business for the long run. He continued by saying that, in his opinion, Tesla will have phenomenal growth by 2030. Despite some investors selling their shares and losing faith in Tesla, Chamath Palihapitiya, Canadian and American venture capitalist, engineer, SPAC sponsor, founder, and CEO of Social Capital, remains a fervent backer of the company and its stock. He even took part in a sell-off a few months following Tesla's optimistic prognosis. When the stock began to peak in 2021, Palihapitiya sold his Tesla shares. It should be noted that he had earlier in the year predicted that the world's energy generation infrastructure would be turned upside down if the predicted disruption to the utilities of electricity didn't materialize, and that trillions of dollars worth of bonds, capital expenditures, and value were resting in it. Tesla is going to double, then triple. Like ARK Invest, Chamath Palihapitiya thinks Tesla will grow at a rate of more than 10 times its current rate since it has managed to remain a top producer of electric cars or EVs. And could question why these well-known brands and businesses have this much conviction and assurance in Tesla. It is common knowledge that due to supply chain problems, Tesla was able to maintain manufacturing during the pandemic while all other manufacturers came to a complete halt. Furthermore, in order to support the Shanghai and Fremont facilities production, Tesla constructed 2 additional factories in Austin and Berlin. Together, these factories will allow Tesla to grow its manufacturing scale and operational margins in order to produce more cars. The corporation has the potential to attain increased gross margins from the recently constructed factories in Austin and Berlin. Even after that, Tesla persisted in building the Tesla Gigafactory in spite of various unanticipated events that happened all across the world, including as the COVID-19 epidemic and the Russian-Ukrainian war, which had a significant impact on the global economy. The goal of building the Tesla Giga at Nevada was to hasten the global switch to sustainable energy by producing more and more affordable electric cars and energy products. Located in Story County, Nevada. Tesla Giga Nevada, also known as Tesla Gigafactory, is a lithium-ion battery and electric car component factory. It is anticipated to be the world's largest building powered entirely by renewable energy sources to reach net zero energy. The goal of this structure is to address Tesla's battery issue. It is noteworthy that the accuracy of these forecasts and presumptions depends on the state of the economy, which in turn influences stock and market values. Even yet, it is important to remember that these forecasts came from reputable investing firms, experienced investors, and analysts, so taking that into account is worthwhile. Naturally, the information and figures provided by ARK Invest and the other businesses and investors have been derived from a rigorous analysis of the fluctuations of Tesla's stock, as well as more recent developments from the company. Check out our other videos on our channel to see more content about Tesla stocks.